What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this is a channel dedicated to my investment journey, along with coverage on Tesla, NEO, Virgin Galactic, and Chargepoint. Come for the information, stay for the fun clips. So here we are, another eventful week in the market, and it's yet another reminder of how quickly things can turn around. And for those of you who are subscribed and caught last week's video, you heard me talk about why I expected things to turn around in a major way. There's only a small window of time left for all these fund managers and large institutional investors to get back in a major way. If you consider that over the last few weeks, the narrative has shifted from, oh my God, inflation is coming, to, yeah, I think we're about at the right valuation, to, yes, we're about ready to redeploy our cash and get back in a major way, which is pretty much this week. That's what we've been hearing. And all of the Q4 2020 earning calls are complete, and it's been nothing but good news for a lot of the high growth stocks. And you add to the fact that the 1.9 trillion bill is likely going to get signed off by President Biden next week. So those checks are going to start flowing to people and to the market. If you want to get back in a major way, you pretty much need to do it right about now. In the next week or two here, it's more than likely, in my opinion, we're going to see a leveling and then start shooting right back up. Well, sure enough, Tuesday morning, there was the official announcement based on the true market indicators for inflation that there was no actual signs of inflation anywhere in the economy at this point in time. And that's basically what the Fed has been saying for months now. And what followed from here was one of the smoothest, most effortless recovery and shift in market momentum that we've seen in quite some time. And that pretty much looked like this guy over here. That was truly effortless, but that's the only thing that comes to mind when you look at the chart on Tuesday morning, when the market literally shot right back up like nothing had ever happened. The second inflation fears disappeared or dissipated, everything just bounced back, and it was truly epic. And from there, the market only continued moving higher, with eventually on Thursday, President Biden signing a new stimulus package into law. And despite the fact that we saw the Treasury bond yield rates go back up to about 1.6% on Friday, there was only a small give back on growth stocks as people took profit heading into the weekend. The moral of the story here is if you understand the narrative of what's moving the market in these periods of extreme volatility, then you can position yourself and ultimately come out with a much stronger portfolio once things kind of settle down a little bit. And so how much stronger, specifically for my portfolio on April 3rd, is when we'll go through my Q1 2021 earning call, so to speak. And that's when I'm going to take you through how much I've made or lost, frankly, in the past 3 months, right? And so this is not going to be just a percentage number that I give you every week, but this will be for a whole 3 months, percentage and dollars. And so if we're able to get to 100 subscribers by then, what I'll do as a reward to everybody for helping me grow the channel and advance it in a major way is I will not only give you the percentage and the dollar amount, but I'll also walk you through what's currently in my portfolio, total positions and dollar amount for each stock that I'm in. So that will be my reward and my thank you for helping me get to 100 subscribers. All right, so jumping into the focus of today's video, we'll go over some recent news for some of the channel's favorite stocks as well as crypto. And I'll give you my key takeaways as well as what I'll be looking for as we move forward. And we'll wrap things up with a weekly performance review expressed in percentage by gain or loss for the portfolio. With that said, let's get into the video. Let's kick things off with Chargepoint. And earlier this week, they had their first earning call as a publicly traded company. And overall, the news was good. It's pretty much what we expected. They reiterated their guidance for 2021 with revenue of $35 to $45 million expected for the year. During the Q&A section, they also provided a little bit of guidance on their expectations for next year, 2022, as EV adoption accelerates. And at that point in time, they're expecting revenue in the vicinity of $195 million to $205 million, which is a pretty significant growth from year over year. Beyond that, they are also sitting on $615 million worth of cash on their balance sheet, thanks to the merger that was completed earlier in the week on Monday. So overall, again, in a very good position to grow over the next year and beyond. The other thing I'm excited about now that Chargepoint is publicly traded and the merger is complete is that it will be much easier to get access to what the company has been up to as far as the deals that they're making and just overall moves that they're making as they're growing. And one of those deals came earlier this week with the announcement that Volvo will be integrating the Chargepoint app into their onboard computer. The main advantage of that is that rather than using your own phone app, you'll be able to simply use the onboard computer in your car and find all the Chargepoint locations. But beyond that, because again, Chargepoint is the largest network provider for a charging station in the US, they also have partnership with the much smaller networks that allows virtually all the infrastructure in the US and Europe for charging stations to be displayed in the Chargepoint app. So pretty significant deal here for Volvo and Chargepoint partnering together. And the last thing that I will mention here is that during the earnings call, there's a Q&A section where analysts will ask directly to the CEO, CFO, and pretty much everybody on the Chargepoint team just questions about where the business is going. And one of the names that popped up during the Q&A section was Colin Rush. If you recall, this is one of the top analysts covering the Tesla stock, and he's been pretty much on the money when it comes to what Tesla was doing. And so to get his perspective and where he expects Chargepoint to go based on the information that's now available to him should be very insightful. So I'll be looking forward to, what the price targets are, and I will be sure to share that with everybody. Next up is Tesla. And man, where do we even start here? Maybe let's go back to Tuesday when Tesla stock posted one of the strongest single-day performance in its history. I believe it's ranked in the top 3 for the stock since, again, it went public. And on Tuesday, the Tesla stock went from $563 a share and some change to $573.50, I believe, at the closing bell. That's an increase of $110. And another way to think about this is that if this was pre-split adjustment, it would be an increase of $550 in a single session. That's huge. And even though we're still a ways off the all-time high posted earlier in the year of $900.40, we're well on our way and likely going to exceed or match that record before summer hits. And that idea is supported by a couple of new price targets issued earlier in the week. The first one coming from Vijay Rakesh of Mizuho, and his price target for Tesla is now $775 with a buy rating. The second one is coming from Pierre Ferragu of New Street Research, giving a price target of $900 with a buy rating. Both of these are upgrades of where they were prior to this week's performance. In other Tesla news, a couple of things that caught my attention in the headlines were, one, that Tesla had a fire at the Fremont factory. And reading the headline, you would think that the entire factory was caught on fire because obviously it's Tesla and therefore things tend to get blown out of proportion. It turns out that it was a small hydraulic leak leading to a small fire, which again was put out and handled by the employees. And by the time the firefighters actually get there, everything was already under control. There's nobody hurt, but again, the headline makes it sound fantastic, right? That, everything was on fire, burning blaze and everything else, but not the case. The other headline that caught my attention this week as I was going through all the news that was available for Tesla is that apparently there's a shareholder out there, a Tesla investor, who is suing Elon and the Tesla board of directors for Elon's erratic behavior as of late, speaking specifically of his tweets about cryptocurrency, as well as the decision of Tesla to invest into Bitcoin. It actually doesn't make sense. And so my take on it, again, this is just my opinion, it may or may not be true, but again, this is what I believe, is that this is not a Tesla investor in a sense that they're looking for Tesla to move up, but instead they're a short seller on the stock. And so their interest and what they're going after is the stock further decreasing, right? Now that we're turning the corner and the stock is recovering, they're probably starting to lose money. And so it makes sense to throw more FUD, so fear, uncertainty, and doubt out there, and trying to capitalize on the news that Elon was being investigated by the SEC, which again turned out to be false. But if you can throw a lawsuit out there, get people to think that maybe, just maybe, Tesla and Elon are being sued and they're going to lose a ton of money, then the stock may be impacted in a negative way. And therefore, as a short seller, you're making money. The bottom line here is Tesla is back on a move with positive momentum, and near-term catalysts that I will be looking for, so these are my key takeaways, is one, the FSD beta, news on the FSD beta and how that rollout is going. Again, remember that it's been extended to double the amount, so now we're at 2,000 people that have access to FSD beta. The second item that I'll be looking for is more details around Cybertruck. We're expecting to find out what the final production version will look like, likely during the Q1 2021 earning call that is set to happen sometime in April. Last but not least will be the reinstatement of the $7,500 green credit for EVs by the Biden administration. And so we should be hearing a little bit more news on that in the coming weeks to months here. When we talk Tesla, we'll likely cover NIO as well, and this week is no exception. We saw a nice recovery in the NIO stock from the lows of around $35 to ending the week at just above $45 and some change. And so part of that was driven by obviously market momentum, some of the fears around inflation dissipating, but also Vijay Rakesh, which we spoke about earlier in the Tesla piece, also initiated coverage on the NIO stock. And so his price target for the NIO stock by the end of the year is $60 with a buy rating. And that is based on a lot of the same points that we've discussed on the channel before, BaaS being one of them, so battery as a service, as well as the fact that NIO is well positioned in the Chinese market and has home court advantage. And beyond that, he also quoted the total addressable market expanding for NIO as they make their move into the European market. That leads us to the second point of what also helped drive the change of sentiment on the NIO stock. We found out earlier this week that the Norway Central Bank purchased a lot more NIO shares. And even though the actual purchase took place back in Q4 2020, the disclosure of that purchase wasn't made until, again, earlier this week. And so based on that, we now know that they went from a 13.4 million share count in the fourth quarter of 2020 to a total of 13.7 as of, again, this week here. The main takeaway and why this is important is because we now know that Norway is actually the first market, European market, that NIO will be entering. And so to have their central bank purchase more shares is a big sentiment booster, right? This is them expecting that NIO will do well in their country and overall in Europe, and therefore positioning themselves to be able to capitalize on NIO entering that market. So as far as the NIO stock is concerned, what I'll be looking forward to for near-term catalysts are going to be the March delivery numbers set to be released in early April. An expectation here is that month over month will perform better. And the main reason being that during the month of February, NIO had to contend with the New Year holiday being celebrated, and therefore they could not run the factory and deliver as many cars as in previous months. So that's why we saw that slight decline there. Okay, so switching gears into the crypto space, there are a few noteworthy things worth mentioning. And you've heard me say this before, but 2021 is the year of crypto. And that's primarily because these gains that we're seeing right now are no longer just the result of a few diehard fans buying and hoarding these cryptocurrencies, but it's because businesses and institutions far and wide are recognizing that this new asset class has merit to it and allowing people to make everyday purchases through their businesses, through these businesses, can be a highly lucrative way for them to increase their margins. An example of how businesses are supporting the use of cryptocurrency and Dogecoin in particular, this company out of Vancouver called HelloPal announced earlier this week that they will start mining Dogecoin and Litecoin. And their rationale for this is to support the increased demand of crypto as utilization and acceptance increases. One of those such example of increased utilization comes with the other announcement that I'll share now from the Kessler Collection Group, which is a luxury hotel group. And they announced that they will now accept Dogecoin along with other cryptos. And the main benefit that they quoted for this decision is that this move will make it easier for guests traveling globally, both in time saved from going to a local currency exchange and in the money saved with a lower exchange rate. And that was again from their CFO speaking on why they made the decision to allow the use of Dogecoin as well as other cryptos. As there's more and more of these announcements around increased utilization, mass adoption of cryptocurrency, there's one company at the center of all of these deals. And this was true with Visa, MasterCard, now the Kessler Group, as well as Mark Cuban last week saying that he would allow the use of Dogecoin. And that company is BitPay. And so that got me curious. Obviously, I looked them up to give you a sense of all the businesses that are currently accepting cryptocurrency. So what I did is I opened an account with BitPay. It was pretty easy. It was just downloading the app. I loaded a little bit of money on there, as you can see. And I went under shop, and there I clicked on see all brands. And this here now shows you all of the businesses that allow you, look at AutoZone, to use cryptocurrency to make purchases. We get Burger King, and just to name a few, like Domino's, DoorDash. Another one that I saw in here that was interesting was Home Depot. You can use crypto at Home Depot, Hooters, Hotels.com, and the list goes on. MasterCard is right there. And again, the list goes on and on and on. And I think we have Microsoft on there with Xbox Live. Pretty insane. And that list, as we know, is not all inclusive because, again, BitPay is not the only company that's playing matchmaker between legacy world and the crypto world. There's a few more out there. Binance is another one that comes to mind. And so cryptocurrency really isn't going anywhere. It's only weaving itself deeper and deeper into what we do on a daily basis. And in my opinion, again, not a financial advisor, but having some exposure in your portfolio to crypto, whether it is through purchasing the cryptocurrencies directly or betting on companies like Mara and Riot, gives you access to maximize your returns based on the increased utilization of crypto. Okay, so now let's switch gears into the weekly performance review by percentage gain or loss for the portfolio, and I'll turn on the screen recording so we can walk through that. So you can see coming into the week here on Monday during pre-market that we were actually doing fairly okay at 3.16% increase. And then that number dropped a little bit to a low of negative 4.44%. And after that, that's pretty much where we ended the day at 3.03% on Monday. Tuesday, we got the news that we were expecting, and we saw a nice increase all the way to 26.39% for the portfolio. And from there, it only got better into Wednesday, ending the day there at 24.15% increase. Thursday, we reached as high as 40.03% before dropping back down and closing Friday at 37.51%. And now, obviously, we remember that crypto moves around a little bit, even crypto never sleeps. And so we ended the week at 38.53% increase on the portfolio value. The key takeaway here is that even though we're nowhere near back to the all-time highs that we were experiencing mid last month, because I was able to advance all my high conviction position in a major way, I'm already reaping the benefits from that. And so by the time we reach back to those all-time highs, I will be much, much further in the overall portfolio value. All right, people, this will do it for today's video. If you enjoyed the content and found it valuable, please drop me a like and share with your friends. Also, if you're not subscribed yet, please do so that you don't miss any future videos. And again, as a reminder, I post every Sunday and occasionally during the week. And April 3rd is when we'll go through the entire portfolio, assuming that we can reach that 100 subs number. Thank you for watching, and as always, stay humble, hustle hard, and I'll see you in the next one.